And we are live. Good evening, everyone. Tonight we will be discussing the comments that Paul Tudor Jones made earlier today on his interview with CNBC, where he basically referred to Bitcoin as investing in a tech stock. And I think that's actually good that he made that comparison because so many people miss that important part of this entire, you know, ecosystem, that this is technology. This is fintech, financial technology, and this is extremely disruptive technology. And when you think about how large the global financial services industry is, it's worth, close to 90 trillion, 100 trillion, maybe even more when you really start thinking about financial services. So this is why you constantly hear me say that there's no way that we aren't going to be able to capture $1 trillion. We should be able to hit $1 trillion market cap for the entire crypto space easily because this is disruptive technology, similar to how Tesla is disrupting and revolutionizing the electric car industry. Think about how Uber is disrupting the cab industry. So this type of technology is extremely disruptive, and many people miss that. See, when you look at Bitcoin, Ethereum, Tezos, Nulls, Waves, all of these different protocols, that's exactly what they are. They're protocols. And when you look at the internet, something that we use every day, many of you are not aware that the internet is made up of multiple protocols stacked on top of each other, from the physical layer to the data layer to the network layer. TCP, IP, SMTP, FTP. These are all different protocols that make up the internet that allow you and I to have this streaming for you to watch the stream. The thing about that is, and what's unique about where we are today, is that you didn't have an opportunity to invest in those base layer protocols such as HTTP and HTTPS. Now, with Ethereum and in the entire DeFi stack, you have an opportunity to capture that wealth transfer. And when you think about it, most of the wealth is captured by the tech companies on these protocols. Now you and I, we have a chance to invest in these base layer protocols so that we can capture the wealth. Because as I said before, when you think about this, when you look at Ethereum, I don't care what protocol, no matter how high above the stack you abstract and go, you still need ETH for gas fees, right? So owning Ethereum is going to be extremely important going forward, and then especially with moving to proof of stake. So there's so many different things that I want to cover. Also, I want to cover the congressman, I believe his name is Ben Sherman, where he made some comments talking about 46% of Bitcoin's transactions are used for illicit activities or illegal activities. And, at the end of the day, the number one funding source for criminal activity is the US dollar, without a shadow of a doubt. When you look at the FinCEN papers and you look at all of the money laundering and the criminal activity that's been going on in the banking system and in the banking sector, it's been well over $2 trillion that they've flagged since 1999 as fraudulent or illicit activity going on inside of the banking system. So we're going to cover all of those different things. So please do me a favor. If you can see me clearly and hear me clearly, type 1 in the chat. Also, like this video, share this video, subscribe, hit the notification bell. Make sure that you set it to all so that you can receive all of my notifications. Also, make sure that you join my mailing list because YouTube doesn't like to send out my notifications. So make sure that you join my mailing list so that I can email you when I'm going live. You can also contact me via Instagram. Simply click the link in the description below. It'll take you to my page. Follow me and shoot me a DM. Also, if you're interested in learning about blockchain technology, cryptocurrencies, web development, and also eventually we're going to be getting to building dApps, decentralized applications, I created my Tech Academy. We have a free 7-day trial. This way you can learn how to harness and use this technology properly. So take the free 7-day trial. A link will be in both the chat and the description. Test it out and see if you like it. For those of you who are seeking a consultation with me, I have 3 available slots left for the week. Again, to lifetime students, your consultations are free. Your success is my success. Reach out to me. Some of you, I've been trying to get in contact with you, and for whatever reason, you have not gotten back to me. You've paid your money. It would make sense to reach out to me. Also, even if you and we've already had a consultation, if you are a lifetime student, you are more than welcome to contact me again, and we can dialogue some more. So with that being said, we can get ready to get started. The market was doing really, really well earlier today. I believe Ethereum touched like $420. Then Bitcoin hit like about 13,800. So the market's definitely in, bull mode. And we are at the beginning, like Paul Tudor Jones said in this CNBC interview, that this is just the first inning. We haven't even began to really get to lift off. I've been in crypto for a very, very long time. I've been through bull markets. I've been through bear cycles. And what I will tell you is that the one thing that you should always expect in crypto is volatility. And that's a beautiful thing if you're a trader. But for myself, I'm not looking to trade this back and forth. I'm looking to buy and hold. 2 people get rich in crypto, 2 types, holders and founders, right? So when the market crashes, I'm not looking to sell. I'm not looking to panic. I'm looking to accumulate more. Dollar cost averaging. We're going to be having a course coming up inside of the academy on really teaching you about how to properly position yourself and stuff like that. That'll be coming in the coming weeks. But it's really important that you understand that we're in the middle of an election cycle. There will be a lot of booms and there will be some busts because we're in an election cycle. And as I said to you before, I believe that the Democrats are going to steal the election from Trump, similar to how George Bush stole the election from Al Gore. Again, this is not about my political leanings. Many of you know I tend to lean to the right. I'm more of an independent, though. This is just me simply telling you what I believe is going to happen. So let's get to the interview.
Good. I was just going to add.
Hold on, let's turn this up a little bit.
On top of that, last time we talked to you, I don't know if it was the last time we talked to you, but back in May, you had told us that you were buying about 2% or putting about 2% of your assets into Bitcoin, which has been on a wild ride upward, especially even in the past 48 hours, as PayPal has announced that it's going to allow Bitcoin and cryptocurrencies onto its platform. What do? Are you selling any right now? Are you buying even more? What's the thought?
Well, Bitcoin, remember, the reason that I liked Bitcoin and wrote about it to my investors was because back in March and April, it became really apparent, given the monetary policy that was being pursued by the Fed, the incredible quantitative easing that they were doing and other central banks were doing, that we were in an unprecedented time. And that given the fact that we were going...
Now, this is key, especially if you're someone like me. I've been following monetary policy going all the way back to Ben Bernanke. And if you understand what's been happening with quantitative easing, when the Fed said that they were going to deleverage and unload these toxic assets, going back to TARP and TALF, I'm talking about back into 2009, 10, and 11, the Fed was supposed to be unloading and unwinding its balance sheet. And here we are now today, and the Fed's never unloaded those toxic assets because no investor in their right mind would buy a toxic asset. So the Fed is always going to be the buyer and the lender of last resort. And now I have videos where I dive deep into this. The Fed's balance sheet is sitting at about $7 trillion, and they're going to have to increase it. So what Paul Tudor Jones is saying now, again, I'm not sitting up here trying to make it like I'm some guru. I've been saying this now for well over a decade. And Peter Schiff's been saying this because, a lot of you know I've been following Peter Schiff going back to Inflation USA. There's no way that the Fed can unwind its balance sheet, right? Because essentially quantitative easing is basically them going into the market and buying up assets or trying to paper over toxic assets. So when he's talking about monetary policy, understand that the Fed is still sitting on assets from 2009, 10, and 11 that they haven't figured out a way to unwind, and they won't be able to unwind it. So smart money is starting to see the only way out of this is to continue to keep buying up assets. At a certain point, that will not be sufficient for the market. I have other videos where, remember, the Fed was even talking about buying ETFs and junk bonds. Really just think about how crazy that is, that you're, a private institution that's a quasi-government institution is going into the market basically and buying toxic assets. So if you are a company, right, or you are, an investor, that even if you are operating at a loss, even if you're operating your business poorly, you can always go to the Fed as a lender of a last resort or a borrower as a last resort. That's extremely problematic. So let's finish listening to what he has to say.
Going to try to monetize many of the negative issues that COVID brought, that one had to begin to think about how you defend yourself against inflation, with M2 now growing at a 25% annual rate. So, which we haven't seen in 80 years, by the way.
For those of you who do not know what M2 is, M2 basically is the money supply, looking at checking accounts and other assets that can be converted to cash. And I always tell you guys that there's more debt in the system than there's actual physical cash in the banking system. So right now, if we come over here to a chart, and you can go to Fred and look at this stuff as well. Let's enlarge this chart. This is the M2 supply. And if you look at us coming out of the quote unquote Great Recession in 2008. So when people say to you that there's no inflation, when Ben Bernanke, Janet Yellen, and all of the talking heads are telling you, oh, don't worry about it. You and I know that there's inflation. You know why? Because when we go to the gas pump, or we go to the grocery store, or we go to college, or rent, we can see the cost of these goods over time are constantly going up. And what's happening is it's not that the prices are going up, it's the purchasing power of your money that's actually going down. And that's the most important thing that you need to understand, because your wages, they may go up in nominal terms, but in real terms, based upon what you can buy with your money, your wages aren't increasing, right? If anything, your purchasing power is going down. Now, if you look at this, the M2 supply, money in circulation, look how it just ramps up after 2008, right? This is the Great Recession in 2008. And then after that, it just goes up, 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 up. And then now look, we get this hockey stick, right? And it's very important that you understand, because we're getting to the point of exponential growth now in terms of money supply and money creation. That's not a good thing, because if we get this hockey stick, that's the inflation. Now, remember, there's over $80 trillion worth of debt if you look at all of the actual debt that's in the system, as far as just like public debts. But now if you start looking at the money supply, you can start to see this is problematic. You can't say that there isn't any inflation. And the money supply is constantly growing over and over and over a year after year after year, as he said, to the tune of between 20 to 25%. So this is extremely problematic, where you're going to start to see these big, this exponential growth. And I talked to you about that in a course about a lot of people don't understand exponential growth. Like when you look at 2 to the second power, right? You're basically saying that's 2 times 2. It's 4. But if you increase the exponent by just 1, the output is doubled, right? So when you start looking at exponential growth, you get to the point where the doubling, it starts happening at a much quicker and accelerated pace. And every time it doubles, the number is bigger. So when we start talking about inflation, right, and devaluation, it literally will happen in a matter of a week, like that quick, because you get to the point where you lose control of what's actually happening, because they're trying to fight deflation. But the only thing that's really deflating when you think about it is asset prices, right? Wages, like deflation is actually good for people like you and I. But again, that's another video beyond the scope of this video. So I don't want to get too, technical. Let's get back to the video.
The last time we saw that inflation was 3, 4, 5%. The reason I recommended Bitcoin is because it was one of a menu of inflation trades like gold, like tips break-evens, like copper, like GSCI, like being long the yield curve. And I came to the conclusion that Bitcoin was going to be the best of the inflation trades, the defensive trades that you would take, because when you looked at the overall market caps of all the rest of them and you looked at all the characteristics, Bitcoin had the advantage of had a very small coterie of people who were investing in it. It was portable, it was liquid, had a variety of characteristics that made it a great inflation hedge. The one thing it didn't have is it didn't have integrity and long-term staying power, which every day that goes by, of course, it gains on that. It gains on credibility and integrity. But what I didn't appreciate.
Right. And I want to also comment on what he just said about Bitcoin not really having a long track record. See, what a lot of people miss about Bitcoin is that if you actually look at the length of time that Bitcoin's been trading, it's actually been trading longer than the S&P. What do I mean by that? Remember that Bitcoin trades 24/7, 365. Now, when you look at traditional stock markets, they close at a certain time and they open at a certain time. And then you have to also look at the fact that they have holidays and they don't trade over the weekends. Remember, the crypto markets are 24/7, 365. So when you look at the length of time that Bitcoin has actually been trading, I believe it's equivalent to the S&P, if not longer, because of the fact that it trades over the weekends and it trades all day and all night long. So you have to keep that in mind, that every day that it trades more and more and more, it does build up a track record, but the track record is growing at probably 2 times or 3 times the rate of the traditional stock market, because the fact that this is a global market and it trades 24/7, 365. So keep that in mind.
And now I know what it must feel like to be a tech investor. Remember, I don't really trade individual stocks. I'm just a macro trader. But Bitcoin has a lot of the characteristics of being an early investor in a tech company. And I didn't realize it until after, unfortunately, I came on your show and got besieged by God knows how many different people on Bitcoin. And again, I've got small single-digit investment in Bitcoin. That's it. I'm not a Bitcoin flag bearer. But what I learned was, and what I was so surprised by, is that Bitcoin has this enormous contingent of really, really smart and sophisticated people who believe in it. And now when I think of the menu of the inflation hedges, the thing that Bitcoin has, again, it's like investing with Steve Jobs and Apple or investing in Google early. You've got this group that's, by the way, crowdsourced all over the world, that are dedicated to seeing Bitcoin succeed in it becoming a commonplace store of value and transactional to boot at a very basic level. And so I've never had an inflation hedge where you have a kicker that you also have great intellectual capital behind it. So that makes me even more constructive on it. If you think about it, if you're long 230s, right, you're effectively short the bond market. That's your inflation hedge. You're really betting on the fallacy of mankind rather than its ingenuity and entrepreneurialism. So I like Bitcoin even more now than I did then. I think we're in the first inning of Bitcoin, and then it's got a long way to go.
Right. Hey, Paul,
some key things that he said right there, and this is what I constantly say to you guys. When you look at like Tezos and Cardano, not saying that there's anything wrong with the technology, but when you look at the intellectual capital and the actual financial capital that's pouring into DeFi, mainly into the Ethereum ecosystem, you can't replicate that type of intelligence. Like, you have people leaving big time tech firms and tech companies, people leaving big financial institutions to come into this DeFi ecosystem. That's powerful stuff that you can buy into a protocol. And you're really buying into the mind power of these individuals who are truly, truly intelligent, and they truly believe that they are creating something that's going to revolutionize and change the world. So you're getting a chance to tap into that. See, when we start thinking about the internet, and I want to pull this up because I want to give you a visual so that you can see what I'm talking about, right? When you look at this, right, this is the basic stack that makes up the internet and the different applications in the software and the physical layer, right? These are the different layers that allow you and I right now to even be having the stream and you watching the stream, right? You have the physical layer, you have the data link, the network, the transpoint, the session, the presentation, and the application layer. And so when you see like HTTP and HTTPS and SMTP and FTP, these are all of these different protocols that make up the internet, right? That make up the data layers and make up the transport and make up the internet and the network interface. When you understand all of these different layers right here and these different protocols and how they're stacked on top of each other, I want you to think about the DeFi stack. And I want you to understand that when you use the internet, you don't say, oh, let me pull up the HTTP protocol when you use your web browser, right? You just use the internet. You're not thinking about the fact that you're literally interfacing multiple protocols at one time. Many people don't even know what a protocol is and what these protocols are and how they work. You just use it. That's where eventually we are going to get at and get to in DeFi. Remember, all of these protocols, you couldn't invest in those protocols. So when you look at the internet, it's just an application running on top of these layers. But Facebook, Amazon, Netflix, Google, right? All of these different tech companies, they were able to capture that wealth. So if you wanted to capture the wealth that was being built on top of these protocols, you had to invest in, the secondary, the stocks. When we look at Ethereum and we look at, all of the different tech that's being built on top of that, we actually have a chance now to invest at the protocol layer. Imagine if you could invest in TCP or IP and capture all of the wealth that was built on top of those protocols. And I'm going to show you exactly what I'm talking about right now. Keep in mind this stack that makes up what we utilize every day with the internet. So now when we come over here and we look at right here, we look at Ethereum and we look at the stack. This is how the stack is going to look. It's going to look exactly the same, right? We have Ethereum as the base layer. We have Maker, we have Compound, right? Then we have the application layer, right? And then we have all of these different user interfaces and things that people can use. Now, obviously, the DeFi ecosystem has, exponentially grown since this, stack was made. But I just want you to keep that in mind that when you're buying into these different cryptocurrencies, you're buying into the actual protocol. So when we start thinking about the financial services sector and where this can potentially go, right? If we come over here to this Investopedia article, it says that a growing and shifting sector. Market estimates believe that by 2022, the financial services market is expected to reach $26.5 trillion, growing at a rate of 6% during the forecasted period. Asia Pacific is the largest financial sector globally, followed by North America. So when we're talking about DeFi and disruption, we're trying to disrupt a $26.5 trillion market. You don't believe that we can't capture a $1 trillion market cap? But now you have a chance to actually invest in the actual protocol, right? You're not investing in this company and hoping that the company may be successful. You're not banking on the quote unquote management of the company or the performance of the stock or the performance of the company. Like Paul Tudor Jones said, I'm buying into people who are truly passionate about the technology, but it's open sourced. So you can now build things on top of the technology. And that's where we're going to get to in the coding bootcamp once most of you get up to speed, because I understand this is daunting for the average person who, you don't really have, a tech background. But remember, you don't have to learn this overnight. I've been doing this for 8 years. Like I've been doing this for a very, very long time. Give me 1 second. Hold on, guys. Right. So I'm back. right? And for I know a lot of you are saying, man, you're talking a different language right now. I'm going to share this article with you so you can understand. Like, let's zoom in a little bit right here. Let's go up. Right. So this is just basically talking about the different protocols that I was just mentioning to you. Right. And when it says like the network access layer, right, a network layer is the lowest layer of the TCP IP model. A network layer is a combination of the physical layer and the data link layer defined in the OSI model. When you look at the internet layer, an internet layer is a second layer of the TCP IP model. An internet layer is also known as a network interface. So let's just come here. I'm going to post this. I want you to go and just look this over a little bit and educate yourself about, the different protocols that make up the internet so that you can see the opportunity here that we have in front of us when we start looking at the tech stack and what we can actually do with this technology. Now, a lot of people, they're not fans of DeFi. They look at DeFi as, being a double spend, but I don't look at it that way. This is the first real use case of this technology. And when you start looking at MakerDAO being like the reserve bank, right? But everything's open. So we don't have to worry about Jerome Powell and Janet Yellen and Ben Bernanke making promises to us as to what monetary policy will be, what the interest rates will be in the future. We don't have to worry about them saying that they're going to unwind the balance sheet or worry about them picking winners and losers, because we can literally see the entire interface of that smart contract. So we know how many coins are minted, how many coins are burned. We know exactly what's happening in the ecosystem, and that's very, very important. If you're a part of the academy, you should know that. When we come here to the Block Explorer, this is what makes things like Bitcoin and protocols like Bitcoin and Ethereum important, that I can come in here and I can click on a block. And I can then come in this block and I can see every single transaction that's happened in this block. I don't have to trust that Jerome Powell has my best interest. I don't have to trust in Joe Biden or Donald Trump to do the right thing, because we know that Trump was talking about, when he was campaigning, I have videos talking about this as well, that the stock market was a bubble. Yet when he came into office, he did everything that Obama did on steroids, right? Because when he gave the tax cut to the rich, they didn't use that money to hire more people and invest in CapEx. They used that money to do a bunch of stock buybacks and basically pay out dividends. That didn't benefit the economy at all. It was phony. But I can then come in here and I can see every single transaction. I can see the addresses. I can see what's happening on each address. I can then pull up, let's pull up this address. This person has 197 Bitcoin on this address. And we can click on it and I can see all of the transactions that this address has been involved in. I don't know who's behind the address, but I can see what's happening, right? So it creates an open ecosystem where you can really try to, have more understanding as to what's going on. And it makes it easy to invest as well, because you can look at a lot of macro trends. Another thing I wanted to share with you, this is another tech company. They just put 10% of their cash reserves into Bitcoin. At a certain point, you have to start following the clues and the breadcrumbs that are being left for you, right? We have Square, we have Paul Tudor Jones, we have Mike Novogratz, we have, Consensus. Who was it the other day? What's the guy? Michael Slayer, I believe his name is, with MicroStrategy, right? We have PayPal now. All of these large institutions and institutional investors, they're getting involved. We have Grayscale as well, snatching up all of the Bitcoin. An ETF is eventually going to come. Remember, there will only be 21 million Bitcoin. So when you start thinking about it in terms of that, you start understanding that, okay, we're dealing with an asset that is scarce and deflationary. Then remember, if you lose your private keys, then that Bitcoin cannot be sold. So that creates an artificial floor underneath Bitcoin. Think about this, right? If I lost my private key, I can't sell it. So they say that it's said to be about a third of all Bitcoin that's been mined already has been lost, meaning the private keys have been lost. So that's Bitcoin, that's supply that cannot be sold. And then if you count Satoshi's coins that have never moved, then you start really getting to the point where you start saying to yourself, this asset's even more scarce. Now, Monero has a similar deflationary curve, but I cover that in the course. I don't want to get too technical in these videos. This is why you need to join the academy, so you can have a much deeper understanding as to what's going on. And thank you guys for the donations. Hey, Eli, I sent you a message in the academy about not receiving my Monero after using Changely and getting the confirmation that it has been sent. Yeah, I know I responded back to you. We'll figure something out. I'm a little busy tonight, but maybe tomorrow we can jump on like a live chat and figure out what's going on. Hopefully you didn't send your Monero to the wrong address. I hope that you didn't do that, because that may be a problem. So hopefully you didn't send it to the wrong address, and we'll be able to figure it out. So I'll teach you how. Basically, while we're figuring out what's going on, I'll record it so that it can help other students. So. And hopefully you didn't send a lot of money. I always tell you guys, do a small test transaction, especially if you're just starting out. Thank you for the donation, M. James. Appreciate it. Also, to those of you who donate via PayPal, I know I keep saying this, but I'll make sure on Sunday when we have just like looking at the markets, I'll definitely make sure to shout you guys out. So it says Mode Global Holdings PLC, a London Stock Exchange listed company, has announced plans to make a significant purchase of Bitcoin as part of its treasury investment strategy. In a press release on Wednesday, the fintech group said it will convert up to 10% of its cash reserves into the cryptocurrency as part of a long-term strategy to protect investors' assets from currency debasement. Guys, how long have I been talking to you about currency devaluation, currency debasement? It's been going on for a very, very, very long time. There's nothing new here. Now, what I want to get to next is volatility. These are all of the Bitcoin crashes up until today. Maybe, I don't believe that they have Black Thursday that happened back in March with the whole pandemic thing. But I've basically been involved in every one of these crashes, each one of them. You're dealing with an asset class that's only worth $400 billion. It's a baby. This is not an asset class it's not a thick book, meaning that it's very easy to push the market around when you're talking about crypto. So I need a lot of you to keep that in mind. When I look at crypto and I see these crashes, I look at them as, I look at them as investing opportunities. We're in the middle of an election. I'm telling you, there will be a ton of volatility in the markets, especially if this plays out the way that I believe it's going to play out. I believe that the Democrats are going to steal the election. Excuse me. I repeat myself a lot too, guys, because people come in a video at different points. So I want to make sure I clarify my statements, because I have a lot of people who are trolling me and they take my videos and try to chop it up. So I want to make sure that when I'm speaking, I'm, properly, addressing things. So forgive me if I repeat myself. But I'm not a Republican nor a Democrat. I'm more of an independent, but I lean right on most issues. This is not a political statement. I believe that this is what's going to happen. Similar to how Al Gore lost the election to George Bush, I believe that the Democrats are going to do that to Trump. And I believe that Trump is not going to want to leave out of office without filibustering and making this very difficult. Expect volatility. Yes, our bags are pumping now. Ethereum hit about 420, 419 today. Bitcoin hit about 13,800. That's great. We're probably going to get probably a 20 or 30% correction if what I believe happens is going to happen. Right now, between now and the election, Bitcoin, it can pump another 50%. We don't know. But just expect volatility. But I want to show you what happens when you have those crashes and those washouts. I want you to understand, when you have weak hands, you're basically giving away wealth when you should be trying to acquire more wealth. In 2012, Bitcoin crashed from $7.38 down to $3.80. You know what everyone was saying back in 2012? I told you that crypto thing was a scam. Don't buy crypto. The Peter Schiffs of the world, they were coming out saying, see, I told you it was a scam. Don't buy it. It's a Ponzi scheme. Nouriel Roubini, Paul Krugman, all of the economists was coming out saying it's a scam. And then it went from 380. Hold on, let's get the times right. Let's go from 10, right? So this is from 10 to 17, right? So then it goes from 380 to 16 down to 710. Then it had a crash in March 13th. We had a crash on March 13th from $49 down to $33. right? Then we rally from $33 all the way up to 76, and we crash down to 50. So just follow that. If you panic sold at $3.80, you missed the rally up to 1641. If you panic sold $7.10, you missed the rally to $49.17. If you panic sold 33, you missed the rally to 76.91. You missed the rally to 259, crashed down to $45, popped back up to 755 in 2013, crashed down to 378, rallied up to $1,000, crashed down to $152. $1,350 down to $891, back up to $2,071, crashed down to $1,850, rallied up to $2,980. Do you see my point? What I'm trying to get you to understand? If you panic sold these crashes and you didn't buy more, you missed out. Could you imagine panic selling $3.80 and watching it rally to $755? Could you imagine selling at $378 and missing a rally all the way up to 19,000 or up to 7,800? This is crypto, guys. This asset class is tiny. It's very easy for the whales to push prices around. I don't get scared. I buy more. This is why being educated and knowing what you're buying, why you're buying, having price targets as to where you want to buy, where you want to sell, understanding order flow, understanding market structure, understanding timing. Many of you are coming here and you're saying, how do you know this stuff? I know this stuff because I was investing through all of these bear markets. Right? I'm not new. I've been doing this for a while. I got burned on Mt. Gox. Butterfly Labs burned me on ASIC miners. Right? I've witnessed the Ponzi schemes. I witnessed the sushis, the yams. That's been going on for a very, very long time. That's nothing new. These scam coins. I got burned in Substratum. I lost a lot of money in Substratum. I got burned in, I believe it was Neo. Right? I got burned in a lot of these, Chinese versions of Ethereum. It happens. So, you're tapping into a resource that I've been there, done that. Been there, did that. So when I'm speaking to you, I'm speaking to you from the standpoint of experience. Don't be afraid of volatility. This is crypto. Buy more. Dollar cost average, right? Because guess what? You know what Novogratz is doing? Novogratz and the big boys, like Paul Tudor Jones, number one, they probably have options to hedge themselves. But they also understand the power of leveraging, of buying into a position, right? So I always tell you guys, dollar cost average. If I have $10 or $20 or $30,000 to invest, I'm not buying all my Bitcoin right now. I'll buy a little bit at 13. If it comes down to 10, I'll buy some more. If it goes up to 12, I buy some more. If it goes down to 11, I buy some more. And I space out my buy orders over time. Because I understand that I'm dealing with an asset that's extremely scarce. Now, again, we're not just looking at just Bitcoin. When I use Bitcoin just because it has the network effect and the branding. But there are other cryptocurrency projects that, in my opinion, are better than Bitcoin. Right? But Bitcoin, at the end of the day, it has the largest market share and most people are there, right? So I want you to understand that. Ethereum Classic is garbage. I wouldn't touch it. When that fork happened, right, back with the DAO hack, and I cover this in the academy, so I would encourage you to go through the academy. All of the mind share and the talent, right, and the intellectual capital and the financial capital went with Ethereum. It didn't go with Ethereum Classic. Now, I understand why Ethereum Classic took the stand that they took about code being law, but at the end of the day, the market decides who was right and who was wrong. Remember, the market can remain irrational longer than you can remain solvent. You have to understand that. The market, Bitcoin can, look at Tesla. The Tesla bears and shorts eventually may end up being right, and Tesla may end up being the biggest fraud. I don't believe that to be so, but it could end up happening. Understand this. Fundamentally, the market is always right because money is at stake. When you're investing money, your money is at stake. So it's not just okay to get it right. You have to get it right at the right time. So like if you're shorting a stock, like, what good is it to short the stock if you get your face ripped off and then say, well, 2 years later you were right? You have to be able to get it correct at the right time. And at the end of the day, let's just be honest. Like, Ethereum Classic is just dead. Same thing with Litecoin. Like, these projects, the innovation is not happening there. Like, when you look at this DeFi stack that I just showed you, that's innovation. And the DeFi stack is bigger now. Let's pull it up here. Like, when you start looking at DeFi, look at all of these projects. You have credit and lending, you have insurance, you have stable coins, KYC identity, derivatives, prediction markets, marketplaces, investing, exchanges, liquidity, infrastructure, payments, custodial services. Like, there's so much happening in DeFi. Like, a lot of times you come to me and you ask me a question about this project and I'm like, I haven't even had a chance to look at it yet because there's so much going on. And then I'm working on building my own crypto project right now that hopefully will be massive. So it's hard to keep up with, Yearn Finance, Ampleforth. There's just so many different things going on. I got a big bag of Augur. Like, there's just so much happening. So this isn't happening on Ethereum Classic. So as an investor, why would I focus on Ethereum Classic? It's just dead. Like, even if you look at wrapped Bitcoin on Ethereum, right? Like, there's more Bitcoin sitting on Ethereum that's wrapped than that's sitting in liquid. Right? You have to, at a certain point, you have to start, asking yourself, like, does it make sense? Like, they keep selling the liquid network as a side chain, but there's more wrapped Bitcoin on Ethereum than on that chain, right? So, you have to think about that. Mining, if you're not stepping into the mining game with some serious hardware, and understand that I'm not well versed in mining as far as like actually doing it. Like, I run a little bit of miners like here or there, but I'm not really into like the ins and outs. A guy by the name of Vosk Coin is better as far as to how profitable it is, right? Like, as a business. Mining is good for if you want fresh Bitcoin with no UTXOs attached to it. Then it would make sense to do mining. But I'm not really into mining like that, honestly, because I just feel like that's more of an institutional game. And unless you have the actual like money to really go into it the way you need to, I don't think it's feasible for the average person anymore, in my personal opinion. I don't think you should focus on that. But again, back to what I was saying about, Ethereum Classic versus Ethereum. The marketplace is telling you who's winning the battle. It's Ethereum. Right now, again, this is crypto. Anything can pump. I remember DentaCoin was pumping. BitConnect pumped. So you can make gains and the coin can still be garbage. Two things can exist at the same time. Ripple is absolute trash. It's garbage. Doesn't mean that you can't make money from it. So you have to understand that. Remember, keep in mind, we're dealing with an asset class that's $398 billion. It's a baby. It's tiny. When you look at Ripple, this piece of garbage is only worth $11 billion. Someone can easily pump this 30, 40, 50%. Do I believe it's going to happen? Absolutely not. Right? But, you have to understand anything can pump. It's crypto. Anything can pump. Look at sushi. Look at yam. Look at these garbage, of food coins that have been coming out recently. Anything can pump. Right? Irrational exuberance can happen at any time. And as I said before, the market can remain irrational longer than you can remain solvent. I focus on the cream of the crop. I don't have time to play in the garbage. I don't play with garbage coins, in my opinion. Now, if you want to gamble, that's on you. So now, also look at this. This is a really funny page. I would encourage you guys to look at this. It's called $1,200 stimulus is now worth. And basically, as of 9 hours ago, if you put your $1,200 stimulus check into gold, you would be up 10%. If you put your $1,200 stimulus into the S&P 500, you would be up 24%. If you put it in silver, you would be up 59%. If you put it in the NASDAQ, you would be up 35%. If you put it in Bitcoin, you'll be up 97%. If you put your $1,200 stimulus in Bitcoin, you'll be up 97% right now. why is this relevant? Because the marketplace is telling you, where you should be putting your money and where you should not be putting your money. The marketplace is telling you why. It's not that Bitcoin is superior. It's not that crypto in general is superior. It's just numbers, guys. It's math. $400 billion asset class. 400 right here, total market cap. Total market cap is $400 billion basically. It's a baby. This is going to pump more than the stock market. The stock market's well over $90 trillion market cap. It's thick. It's large. More opportunity will be in crypto. And when you have big institutional money coming into play, and now think about it. If the Democrats win, free everything. They're saying free housing, free tuition, free healthcare. That means inflation. So for those of us who, want our bags to pump, although this may be a Biden win will be bad for America, it's going to be great for inflation, because what the AOC is, an absolute moron. Hey guys, I believe that healthcare should be given to everyone. It's a fundamental right. Basically, they're going to print as much money as possible. You don't become a billionaire by accident. That's the people's money. Green New Deal. You know what's going to happen. You will see, if the Democrats win, you will see stimulus like you've never in your life seen before. I promise you that. If Biden wins, automatically just know, as soon as we have anything, they print everything, because they made all of these promises. And then if you get into modern monetary theory, MMT, and these people believe that because we have the reserve currency, that debt doesn't matter. Now you open up the floodgates as to where this can go, right? Because they literally have people in government who believe that deficits and debt doesn't matter because we are the reserve currency. Don't matter. Just print as much as you want. Free everything. Nothing in life is free. Because the people who are working, they have to get paid. Nothing is free. Nothing is free. Remember that. Now, also another funny page before we get to something is Keith McCullough. He runs this, hedge fund service called Hedge Eye. And they basically he came out publicly 2 weeks ago and stated, I sold all my Bitcoin. Right? So they have a page where they've basically been following how Bitcoin's been doing since he's sold his Bitcoin. Right? It says the price of Bitcoin as of October 21st, this post, is up $2,127, 20% since Keith McCullough sold. Right? It's funny when you see the Peter Schiffs of the world, you see the Keith McCulloughs of the world. They represent legacy finance, and they tell you, yeah, I sold my Bitcoin. I'm smarter than crypto Twitter. It's just a bunch of degenerate gamblers who want to go leverage 100x on BitMEX. Okay, that sounds good, but you missed out. And as of today, it's probably like 25% since he sold his Bitcoin. That's not something that you would want to brag about publicly. And I love crypto Twitter because they troll these people and they basically create pages like that. Now, let's get to Brad Sherman. I said Ben Sherman, excuse me. Want to make sure I get his name right. Let's listen to what he had to say, because I think that this is important.
We should be prohibiting cryptocurrencies. They disempower the federal government. And there is an anarchist strain, a libertarian strain that says every time the federal government is disempowered, we should be prohibiting cryptocurrencies. They disempower the federal government. And there is an anarchist strain, a libertarian strain that says every time the federal government is disempowered, Americans should be happier. But it's funny. I've got Republican colleagues who want America to be strong and the U.S. government to be weak. And that doesn't actually work.
So are you saying you think cryptocurrency should be illegal?
Absolutely. I've advocated that for a long time.
All right.
And
think
of it. The purpose of cryptocurrency, it serves no function unless somebody's engaged in nefarious transactions. That's why 46% of the Bitcoin transactions are for people who are doing things illegal under U.S. law, according to an academic peer-reviewed study. That's whether they're evading sanctions, evading tax laws, or dealing drugs. So we already know, and Bitcoin is a small baby here. You can't buy a pack of gum for a Bitcoin. It has to have an off-ramp that you can then convert it into a sovereign currency. This proposal solves that problem and will allow drug dealers to go seamlessly from drug deals to money they can spend on luxuries. This is a chance to liberate those who hate federal laws, whether they be anti-drug laws or anti-drug human trafficking laws, tax laws, or our sanctions regime. This is a chance for them to get around the most effective controls that we have, and that's why it's popular.
He stated a mouthful there, and number one, he said that it's used for drug deals, which isn't true. Most people, it's true. People use crypto to not pay taxes because people are tired of funding a corrupt government. I tell you guys all the time, I don't pay taxes. I don't pay no taxes with my crypto. I only pay taxes when I have to with my business, because you can't get around that. I'm not paying taxes if I don't have to, because they don't pay taxes. Now, the number one funding source for criminal activity is the U.S. dollar in the banking system. How do we know that? I did a video about this the other day, about the FinCEN files that came out recently. Between 1999 and 2017, they have flagged over 2,100 transactions to the tune of over $2 trillion. That was money that was laundered through the banking system for oligarchs, for dictators, for countries like Iran that's on a sanction list, that have sanctions against them. If anything is used for crime, it's the dollar and it's U.S. banks. So let's read this article, because, you get a little bit of that, that pushback all the time. And, notice, and he played on words that he said, based upon U.S. laws, that Bitcoin is used for criminal activity based upon U.S. laws. And they all the time try to throw drugs in there, or throw what's the word I'm looking for? Basically things when you're endangering a child. I can't think of it right now. It's slipping my mind. But that's a very, very small fraction. What they're really saying is that people are using crypto not to pay their taxes. That's the crime that they're basically saying that people in crypto are committing. So when they say 46% of transactions are used for illicit activity based upon U.S. law, basically people aren't paying the government their taxes. They're using crypto to get around that. And the government doesn't like that. That's the problem. Now, it says secret U.S. government documents. And again, when I say secret, meaning these are documents from the actual bank that was revealed, that was leaked. These are real documents. This is not like some secret document made up. You can go look up this information for yourself. As a matter of fact, let me post this in the chat for you guys. Boom. It says secret U.S. government documents reveal that J.P. Morgan Chase, HSBC, and other big banks have defied money laundering crackdowns by moving staggering sums of illicit cash for shadowy characters and criminal networks that have spread chaos and undermined democracy around the world. Again, these are actual official documents. The records show that 5 global banks, J.P. Morgan, HSBC, Standard Chartered Bank, Deutsche Bank, and Bank of New York Mellon, kept profiting from powerful and dangerous players even after U.S. authorities fined these financial institutions for earlier failures to stem flows of dirty money. Let's go down here. It says J.P. Morgan, the largest bank based in the United States, moved money for people and companies tied to massive looting of public funds in Malaysia, Venezuela, and Ukraine, the leaked documents revealed. The bank moved more than $1 billion for the fugitive financier behind Malaysia's 1MDB scandal, the records show, and more than $2 million for a young energy mogul's company that has been accused of cheating the Venezuela government and helping cause electrical blackouts that crippled large parts of the country. JP Morgan also processed more than $50 million in payments over a decade, the records show, for Paul Manafort, the former campaign manager for Donald Trump. The bank shuttled at least $6.9 million in Manafort transactions in 14 months. Tainted transactions continued to surge through accounts at JP Morgan despite the bank's promise to improve its money laundering controls as part of settlements it reached with U.S. authorities in 2011, 2013, 2014. Why is this important? If you're settling, that means you're guilty. So now think about this, and I always say this. George Floyd got a knee on his neck for 8 minutes and 47 seconds for passing a fake 20. They are laundering money for criminals, dictators, drug cartels. They're settling. They don't get a knee on their neck. Now remember, they're making billions of dollars in fees, paying themselves bonuses, and they're getting caught breaking the law. Brad Sherman talks about breaking the law, and they pay a fine, they pay a penalty, and business continues as usual. Think about that. I really want you to really think about that. It says, the leaked documents known as the FinCEN files include more than 2,100 suspicious activity reports filed by banks and other financial firms with the U.S. Department of Treasury Financial Crimes Enforcement Network. The agency, known in shorthand as FinCEN, is an intelligence unit at the heart of the global system to fight money laundering. It says, in all, an ICIJ analysis found the documents identify more than $2 trillion in transactions between 1999 and 2017 that were flagged by financial institutions' internal compliance officers as possible money laundering or criminal activity. $2 trillion. And these are some of the people that they were laundering money for. So when I see people like Brad Sherman say Bitcoin's used for, illicit activities, number one, just because a person may use something for bad things doesn't mean that other people don't use it for good things, right? That argument doesn't even make any sense, because like I said before, based upon that logic, we would have to get rid of the dollar, because the dollar is the number one funding source. When the CIA goes into other countries and tries to overthrow their governments, they pay them and bribe them with US dollars, right? When they want to go fund terrorist groups, they give them US dollars to destabilize on top of other regimes and governments. So that doesn't make any sense. Essentially what he's saying is that he views this as a threat, and he wants to try to use that idea that somehow Bitcoin is, used for illicit activities. Number one, Bitcoin isn't private. As I showed you guys earlier, Bitcoin's more open and more transparent than the US dollar. Right now, if I gave you $1, dollars are very fungible, meaning that extremely fungible. If I give you $1, you give me $1, and we exchange $1, we just exchange $1, right? No one can tell the difference between each dollar. With Bitcoin, every single Bitcoin has a UTXO history, and I can track that entire UTXO set throughout the entire existence of that block, of that transaction of the Bitcoin. I can track it all the way back to the Genesis block. From the block that it was mined from, and I can see the actual block subsidy when the block was created and when the actual coin was minted. I can see it all the way back to when the block was first created. That's very, very important. It's open. It's transparent. So if anything, Bitcoin is more transparent. Now, some people, they know how to use Bitcoin in a way that they can shield themselves, which is a good thing. Just because you're a criminal doesn't mean I'm a criminal. And just because I want privacy doesn't mean that I'm doing something illegal. As humans, it's a fundamental right to have privacy. Like, everyone deserves to have privacy, period. So that argument that he's putting up, it's stupid. If anything, the banks need to be held accountable for the crimes that they're committing And if anything, the dollar is the number one funding source that's used to basically fund criminal activity. So with that being said, now let's look at some charts. We're coming up on about an hour. So I don't like to keep these live streams going for too long. I'll take some questions that's inside of the in the chat. Let's look at the chart. Right now, Ethereum's at 414. Let's see something. Let's go back here just to see if I can pull something up. You know, because I love having receipts when I talk about things. Give me 1 second. Let's go to community and let's pull this up. Boom, boom, boom. This is my community tab. I was talking about Ethereum when it crashed. Boom, boom, boom. I've been talking about crypto on this channel for over 2 years, but I just like to show this because I like to show guys, you know, the truth. Boom, 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 boom. Go back here. Have you seen the Bahamas? The Bahamas, they have a CBDC now. No, I haven't looked at that yet. I'll look at it when I get a chance. Thanks for sharing that with me. ETH was $237 when I was making posts 7 months ago. I was talking about crypto. I remember ETH dropped all the way down to $100. Let's see something. ETH's 215, then 213, 207. So you can see I've been talking about ETH. I've been talking about Bitcoin for a while. Back when Bitcoin's like $3,000, I was talking about it. You had a chance to buy, and if you've been following the information I've been presenting to you, you should have made a lot of money by now. And again, this isn't financial advice. Look at this, 164. So I've been on this channel talking about this for a while. We, like Paul Tudor Jones said in the CNBC interview, we have a long way to go. We're in the beginning innings. And I keep saying this from an employment standpoint, from an entrepreneurial standpoint, from an investment standpoint. You are going to have a lot of opportunities to, you know, make money, no matter which route you decide to go. You just need to make sure that you're not wasting your time trying to listen to a bunch of people trying to sell you a lot of garbage, because that's definitely going to happen a lot. Funny thing, you know, I keep hearing people say, well, not people say, but I constantly get this comment in my comment section about, well, what if the electricity goes out? It's another thing I wanted to cover. Number one, in the past 40 years in modern history, modern technology, can you name one time that the electricity, that the power grid has gone down globally? It's never happened. It's never happened globally that the entire electrical grid goes down worldwide. So that defeats the whole purpose of that. That just doesn't make any sense. There's something known as game theory. And this is a new book that I'm going to put in the academy for a lot of you to read. A lot of you may not know, but game theory is the study of mathematical models of strategic interaction among rational decision makers. It has applications in all fields of social science, as well as in logic, system science, and computer science. It's important that you understand game theory. What do I mean by that? If you're dealing with a rational actor, if I attack the electrical grid and I knock out the power, I'm also attacking myself. See, think about it, right? If I knock out the power, I can't charge my cell phones. I can't pump gas. The gas pumps don't work. I can't take money out the ATM, right? So to have a global power outage, which has never happened anyway, makes it, like, to even say that, you're just pulling for straws. It just doesn't make any sense. It's never happened. It never will happen. Now understand, let's go doomsday scenario. If the power goes out worldwide, you're going to have more things to worry about than whether or not, your crypto bags are pumping. There will be anarchy in the streets, and at that point, no investment matters. Guess what else you can't do? You can't trade stocks if the grid is down. Your food will go bad that's in your refrigerator unless you have a generator, and you won't be able to use the generator for that long because, like I said, gas pumps don't pump without electricity. You won't take out money out the ATM. You'll basically be going into a Mad Max scenario. And then at that point, none of this matters. If we get to the point, which, again, this is a hypothetical because, I always have people who pose that question to me. If we get to the point where there's no electricity, we're going back to the Stone Age. And then there's anarchy on the streets, and may the best man or woman win at that point. Right? Gold won't matter. Silver won't matter. It won't matter. But then listen to you, right? If you have solar panels, that means you have energy. Then that means you have crypto and you have digital payments, right? So you can't have it both ways, right? Like when a person says like there's no electricity, when they say the grid's going down, they're talking in context like there's no power, like no power at all, no solar panels, no nothing. Like in that case, if we're dealing in the context where there's no energy, then none of this matters at that point. Survival matters. Your survival skills kick in at that point. Right. So that type of, critiques about Bitcoin, or any crypto for that matter, it just doesn't make any sense. It's just stupid. Honestly. And I'm not trying to be, disrespectful or anything, but it's like to say like, oh, well, what if the power goes out? Like, okay, just because the power goes out in your area doesn't mean the power is going to go out worldwide. This is a global asset. Again, we never had a global blackout anyway. So again, game theory. It's the same thing with like saying like a 51% attack, right? Like if I'm going to spend $100 million on a mining farm, it's going to take me 3 to 5 years to recoup my investment on the mining equipment that I purchased. Why would I do a 51% attack and be unsuccessful? And then if I am successful, destroy the network and my coins would have no value, right? Like, because you're going to need a place to sell those coins, right? Well, if you're successful in 51% attacking Bitcoin, then you get to the point where those coins are worthless because where are you going to sell them at if you destroy the network, right? So that's the whole idea of game theory. It forces everyone to be a rational actor. Now, if you're irrational, like let's say that you're a government and you just want to destroy it, that's a completely different conversation. And again, this goes back to being educated about the technology and knowing what you're talking about rather than just trying to throw out a bunch of gotchas. Because at the end of the day, you're not getting anyone. Number one, we've never had a global blackout anyway. In modern history, it's just never happened. And if that does happen, you'll have more things to worry about than that. Again, game theory. What do you stand to gain by doing that if you're a rational actor? Nothing. You're hurting yourself. You're literally hurting yourself. So no one would do that. And that's one of the, genius things that's and so it's so creative about Bitcoin is like, that's how more than one person had to create this. So when they say like Satoshi Nakamoto, it had to be a group of people because Satoshi had so many things in mind, the group, when they were creating this to be able to protect and create equilibrium within the system, even with the hashing rate and the mining algorithm and the difficulty level adjusts itself every 2 weeks. Like so much about Bitcoin is just, it's like you can tell was thought put into it, that it wasn't just like some guy who just threw some code together and said, hey, a cryptocurrency. So, it's just, that's why I encourage a lot of you join the academy and get educated. Yeah, that's what I was saying. 406 Monaro. Like at that point, you have anarchy in the streets, and it just doesn't matter. Like if you have no power, you have more things to worry about than your Bitcoin bag, which again is never going to happen. Remember, guys, the Great Reset is about ushering in technology, ushering more surveillance, more control. It's not going to be like a dictatorship like 1984. Where like the government's like in your face and boot on your neck. It's going to be more of a scientific dictatorship where like you're going to want to be a slave. See, like what a lot of you don't understand, people today enjoy being slaves. They enjoy it. See, the best type of prison to put a person in is a prison that they willingly want to be in. Many Americans want to be in this prison. They love it. So you don't even need bars up to this prison because many of the sheeple, they love it. I told you guys, I watch people take their phone and they record themselves doing drugs. They record themselves having sex. They take selfies. Like they put on the GPS to track the app so the app can track them everywhere they go. And they know Eric Snowden told you all of this with the NSA and how they spy on you. People like to be spied on. They enjoy it. Right? So, it's not going to be like this, foot on your neck type of thing. No, these people enjoy this. They enjoy being slaves. That's just the reality. Now, a lot of you may not like it, but that's the truth. People enjoy it. Right? They just jack me into the Matrix. Perfect. Like the guy Cypher. Right? Remember the guy Cypher? As you know, the Matrix is one of my favorite movies. Remember the scene where he basically betrayed them? And he was sitting down with Agent Smith and he says, I know that this steak is fake. I know that it's fake. I know that it's just an electrical pulse going through my brain. But when I come back and I get plugged into the Matrix, I want to be someone powerful. I want to be someone important. Right? And I don't want to remember. That's most people. They want to be plugged in. They enjoy this prison. Right? Now, Agent Smith, he wanted out. Remember, he was saying he was tired of this place. He said it stinks, this stench. Many of us, we're Agent Smith. We want out the system. We want out. We're trying to find a way out. So, very, very, very good, Kenneth Gibson. Right? So, we're in a really, really interesting place right now, in history and in time. And I tell you guys this all the time, and I keep stressing this to you. We're really, really going through a unique time in history, and we're going to look back at this and we're going to say to ourselves, either this is where we made a stand and we fought back against the globalists, or we laid down and we basically acquiesced and, accepted this. But for those of us who are prepared, we will have dominion over the future. I promise you that. We will have control. For the first time, I would say you shouldn't invest no more than $100. Honestly, I don't. When you first start, you should not invest more than $100. Again, like someone they donated $5 earlier, and they were saying that they're having trouble finding the transaction. I hope that they didn't, send a lot of money. Because I in the academy, I literally tell you guys to start small. I tell you guys to start with $100. Get used to sending transactions back and forth. Get used to using a ledger. Know what a private key is, what a public key is, what a public address is, right? Know what is a hash, why it's important. Learn about public key cryptography. Like have an understanding what you're putting your money into. Yes, 100% free crypto education, 100%. I'm a big fan of dollar cost averaging because it balances out your risk. It balances out your risk, and it gives you time to get comfortable with what you're investing in. If you get nervous when you are sending a transaction, or if you get nervous when you're investing or when the price drops, then that tells me you have too much money invested. Look at Chainlink. Look at Chainlink. Oh my God. Look at that. Look at that monster. Now, go back to my older videos. Back when Chainlink was in the top 20, not the top 10. I said to you, Chainlink is better than Litecoin, Cardano, Binance Coin, Bitcoin Cash. I told you guys this. Go back and look at my videos. Ripple. I told you Chainlink was a monster. Yeah, you can start the course at any time. They're recorded videos. VM Gym. I scooped up Chainlink at like $7.70, and now look at it. It's $12.05. I've been doing this for so long. I could do this in my sleep. Mm-hmm. 100%, Courtney Gibson. I've been telling people, wait for dips. I'm not a fan of buying pumps. I believe in buying. I like to buy red. To be a good investor, you have to be counterintuitive, right? You have to think counterintuitively. Excuse me. When the market is pumping, that's when you want to either, hold or like sell into strength, and you want to buy into weakness. So what do I mean by buying into weakness, right? Let's come over here to a chart. And look at this. I drew this box back here. Go back, look at my old videos. I drew this box back in like May, June, July. This what this box goes to. And I was saying to you guys, we're going to move sideways. This is known as accumulation distribution, right? Someone's either accumulating a big position and they don't want the market to know, or they're distributing and they're basically, diluting their position and they don't want the market to know that they're selling. I like to buy sideways action or pullbacks. So let's go to a daily chart so we can see what I'm talking about better. I love buying into stuff like this because my risk is clearly defined. I know that I'm risking 5 or 10%. Let's say that the market drops on me, cool. And I love to buy sideways. Like when the market's moving sideways like this, I love sideways action. Right here, prime example. Go back and watch my older videos. I'm not cherry picking. I was talking about this sideways action. If you're in the academy, I drew these lines for you guys live during our Q&A. And I was telling you, when I see something like this, if I want to be bullish, this is where I want to buy. I want to buy in the bottom of these ranges because it's moving sideways for a very, very long time. It's building up pressure. Remember that investing, you have a bid and you have an offer, right? Like an auction. It's basically an auction. You have buyers and you have sellers. And the market makers are trying to find equilibrium. Once enough buying pressure gets into a certain range, price has to move out of that range. Because all of the buyers, they've bought up everything in that range. So if no one's selling and everyone keeps buying in that range, there's nothing left there to sell at that price. So price has to move higher, supply and demand, right? So the market maker will keep moving price up higher to eventually see if he can find enough demand for price to go down, enough sellers for price to go down, right? So you just have to know what you're doing. I love to buy sideways action like that. I love to buy pullbacks like this. Again, look at this. More sideways action, more sideways action, more sideways. Like I love sideways action. I love it. Right? Or short, right? I'm just really talking about buying because we're in a bull market. But even this, like you can come in here and you can where's it at? I want to draw a box. Where is the box at? I always have trouble finding this. Let's see. Annotations. Rectangle. Like this right here. Zoom in. I love seeing stuff like this. Right? If I'm thinking about getting short, I know where I want to be short at. I know where I want, and I know where I'm wrong at. See, most important when you're trading, it's not about winning every trade, right? It's knowing what's my risk to reward, right? How much am I risking on this investment or this trade, right? Versus what's my reward. If you're more of a buy and hold person and you're saying, listen, I just want to hold this, I don't care, then you don't need to worry about stuff like this. But if you're looking at, trying to maybe swing trade this, hold this for a few months, get in, get out, you want to look for sideways action, especially like in assets like Bitcoin and stuff like that, because, it does move really, really well. Now, remember, technical analysis is just one way of looking at the market. You still need fundamental analysis. And most importantly, it has to be a theme behind why you're investing, right? It has to be a macro theme because that's going to have the liquidity behind the move, the sell pressure behind the move, or the buy pressure behind the move. You have to understand that. You don't just buy something because it pulled back. You don't just buy something because it's moving sideways. I'm pretty sure that Litecoin is moving sideways just because it's moving sideways. But there's no fundamental reason why you should be buying Litecoin, right? There's no, if you look at the fundamental analysis as far as like chain analysis, like there's nothing happening on that chain that should basically signal to you that you should be going long in a major way. When you look at Bitcoin, Paul Tudor Jones, Novogratz, MicroStrategy, Square, PayPal, those are macro themes, big themes that you want to be getting long behind that because you know there's money behind the move. And we're starting to see that. If I had to, first of all, I wouldn't put all my money into one coin, Anthony, right? And again, this isn't financial advice. I would break my money up between Chainlink, Ethereum, and Polkadot. I'll put a third of my money in each one of those projects. Or I'll go half and half of Cosmos and Polkadot. Understand that if smart contracts are going to be the future, any smart contract platform, they have to use Chainlink. They have to. Chainlink, middleware and oracles are the only way that you can get external data into the blockchain. That's it. Right? And if you understand the blockchains or databases, then you have a clear understanding as to where you're going. Right? So Chainlink's going to be a monster. Listen, Chainlink is going to be a monster. It will be a monster. Now, again, guys, we're dealing with technology. Could there be a bug or something in the software in the future? Maybe. I doubt it. When you look at the team is focused, the team is serious. So, that's where I would be putting my money at. That's why I do have my money there. For example, I'll update you guys on my bag, but my bag's pretty much the same. Bitcoin, Ethereum. I have Chainlink now. Polkadot, massive layer 2 solution. I have a little bit of Cardano. I lost faith in the project. I have a bag of Tezos. I'm actually losing money on Tezos. Right, I'm losing a little bit of money on Tezos right now. Am I? Did I add? I have to look at it. I'll probably maybe I'm up a little bit because I've been holding it for a while. I gotta look at it. But Tezos isn't performing that well recently. But I have a bag of it just because I know people are going to look for the cheaper version of Ethereum. I have a little bit of Neo left, but at Cosmos, big bag of Cosmos. Layer 2 solution, big bag of Cosmos. VeChain, big bag of VeChain. Uniswap, sold all my Uni tokens. Got out of that immediately. Big bag of Ontology. Big bag of Ontology. What else? Basic Attention Token, like it. Not a big bag, but I like it. 0x. 0x is not doing that well for me, but I own 0x. What else? Loop Ring's a good project. I don't own it. Where's Augur at? Right here, Augur. Big bag of Augur. Prediction markets. I believe in prediction markets in the future. And that's about it. Avalanche is a coin that I've been hearing a lot about. I haven't really looked at the technology, but I know that they got a decent team behind it. And that's really it for the top 100. Nest is another good protocol as well. You guys can look at that as well. It's another good protocol. Which video in the course? It's the Changely video in the Bitcoin course, and in the Monero, I get into some different dexes in the Monero course. You'll see it. It talks about the exchange. I don't want to say it. The Monero course really goes into some real good stuff. I don't want to say it on here because I don't want people to get it for free. But I cover that in the Monero course as well. With that being said, guys, I'm going to end the live stream here by just simply saying this. You cannot deny the power of this technology. This technology is extremely powerful. I said this yesterday and I'll say it again. A wealth transfer has been happening, will continue to keep happening with or without you. you have a chance now to participate in this wealth transfer. You have resources like My Tech Academy that I created. You have other people who have created things. You even have free resources on YouTube. They're not that good, in my opinion, but there's plenty of resources of people teaching you about the technology, how to use the technology. From the standpoint of being an entrepreneur, from the standpoint of being an investor, from the standpoint of looking for employment, there is a ton of opportunities. Don't sit around and watch this happen because you listened to your aunt or your uncle who gave you an uninformed opinion about this technology. This is the future. This will be a major part of the fourth industrial revolution. And it's not just Bitcoin. I'm talking about there's so many other different cryptocurrencies. So make sure that you are doing your due diligence. Make sure that you are educating yourself. I created My Tech Academy with a free 7-day trial. Test it out. See if you like it. And then, stick around. Also, for those of you who you want to book a consultation, I have 3 slots available left. I had 5 as of yesterday. I only have 3 left. So make sure that if you want to book a consultation and get into, a more in-depth conversation, come over to my website right over here, click on book a consultation. With that being said, guys, have a blessed and beautiful night. I will see you guys tomorrow, and may your bags continue to keep pumping.